Hey guys, it's a market update. Things are looking pretty abysmal right now, to be honest. You can see on the weekly chart we've broken down through this wedge. Very, very clear breakdown. If we come to the daily chart, we still are at this support level, to be fair, 91,000. However, in the previous tests of this level, it was a wick. So this is the daily chart. Price comes down, buyers come straight back in and push the price up. Didn't happen yesterday. We actually finished at this level. Not great. Everyone's super bearish right now. You can see this cloud over the market. A lot of bearishness, a lot of uncertainty because of what's happening in the States. Cutting of spending, unemployment rising because the government is making people unemployed. People are worried about this. There's uncertainty. This is what I've discussed over the last few weeks in my videos saying, Doge is going to cut. That means a recession is coming. Everyone's super scared about this. Let's go over that, some of the implications, and just to know, because to be honest, I think we're in a bull market still. And I think any weakness means, well, the central bank comes softer as well. But like I've said, they won't come at exactly the same time, which breeds uncertainty, which always breeds lower prices. So it's time to really focus on this and get our convictions. Now, if you do trade, check out Bybit. I still use Bybit. They got hacked last week, right? But they sorted it out, business as usual. If you're not comfortable using centralized exchanges, use a DEX, right? Apex, you can trade on here just like a centralized exchange, connect your wallet to it. But always keep your investment bags in self-custody or, off an exchange, right? Exchanges are for trading, but Apex and Bybit, they've stood up for many years, so happy to use them still. But there's some other exchanges you might want to use. I'll leave all of the details down below. 10% fee discount on Apex, $30,000 deposit bonus from Bybit. You've got some other bonuses via the links below as well. You can just go down there and see what's best for you. All of the big macro traders are now focusing on Doge and how bearish this is for risk assets. The US government makes up 25% of US GDP. If that doesn't contribute to GDP anymore, you get a recession. You get higher unemployment, and you get lower growth. That is not good when you have debt to GDP well over 100%. This is what I've been saying for the last month. And it seems like the macro traders and the news flow and everything is focusing on this now. This is what I've been saying. It's the volatility between the cuts and everything there, and then the other side where they have to cut income tax, they have to cut regulation, they have to spur credit creation. That takes time. That's going to have to go through Congress. It's very, very slow. These cuts are actually making inroads right now, and they're still going day after day. This is the issue. This is bearish. Austerity is bearish for risk assets. Doge, job cuts and spending cuts. 25% of the economy is trying to cut itself out now. Right now, how much can they cut? It's a very small percentage right now. It's a drop in the ocean. I get it. But austerity is bearish, right? The only reason GDP is positive and inflation is positive is because of the massive fiscal deficit. If you cut that out, you create an actual Keynesian recession. High unemployment, right? GDP coming down, inflation coming down. The knock-on effects of people getting unemployed through the economy take time, but they will get larger and larger. And then you get, credit contractions. Now, credit spreads are fine right now, but this is what the macro guys are focusing on. This is what they're trying to push out as this bearish scenario right now. Look, it's not going to just crater into recession. They're not going to allow that, right? So the other side of that is, like I was saying, this Doge dividend, don't think this is going to happen exactly as they want it to, but they do realize that they can't just cut. They do need to actually spur as well on the other side. But it's uncertain. No one really knows what's going to happen here. And so uncertainty breeds weakness in prices. People don't want to invest and put lots of money in when they don't really know what's happening. They seem to be going through a bit of a negative impact, maybe a slowdown in growth right now. Now, the other side of that is the central bank and the bond market is way too hawkish. It's so hawkish, it's ridiculous. This has to come in. That can help us a little bit, especially if they start putting out some news flow about cutting rates, maybe cutting QT a bit earlier, etc. That would buoy us a little bit and be great. So the austerity is not good, absolutely not. But the other side of that is that they have to stimulate in some way. If it's not the government spending, then the central bank has to come and through the back doors, through some sort of stimulus, right? Otherwise, you just get a massive financial crisis. No one wants that. But the volatility in between, we have to handle. We have to handle that. We have to know that it may come. Microsoft cutting potential investment deals with AI as well, right, recently. So maybe a bit of an over investment there. Again, not great short term. We've had the bullishness from that, and now we're going through the reality of it. So markets come back a bit. Just the way it is. SBR, the Strategic Bitcoin Reserve, clearly not happening in the way that people thought. People thought that was going to be an executive order on day one. Definitely not. It's going through Congress. It's going to take years. It's a bit of a mess, and so it's just not a bullish factor anymore. IRS cuts and tax cuts, that's great, but it requires lawmaking and Congress. It's going to take a long time. Ukraine seems to be doing pretty well. They want to get that done. That's fantastic news, just generally. So that would be great for financial markets, I think, and maybe oil prices, gas prices, and just great generally. But I'll focus on the financial side. Look, paying down debt is bearish. Paying down debt and austerity is bearish. You cancel money, you create a drag on GDP and inflation. It's bearish for risk assets, ironically. So sorting out your fiscal situation by cutting is super bearish for risk assets. You basically have to grow the GDP side by stimulating. So look, they have to do this because the fiscal side is done, right? It's maxed out. They need to sort this out, get the 10-year lower. That means the short term can also come down. And maybe the central bank is going to have to print. But that's going to take time, and it's not right now. And that's why markets are coming off. There's no catalyst. So uncertainty is bearish, and that's just the way it is right now. It's a bit ironic that this bearishness comes out around range lows rather than when we were ranging into all-time highs. Far be it for me to say that macro traders take positions and then use their influence to try and push the market in a favorable direction. But look, US growth likely to slow. Cost-cutting efforts led by Musk weigh on the economy. Yeah, for sure. But there's nothing in here about the potential of a central bank changing their rhetoric and getting way softer and way more dovish. Rates are way too high on the short end if this happens. Way too high. The bond market is way too hawkish if this happens. And so things are going to change. But like I said, during a bull market, it's not going to happen perfectly, is it? So you're going to get this uncertainty, you're going to get this volatility. In a bull market, Bitcoin can easily draw down 25, 30% from a range high. So you're looking at mid-70s for something that would be a completely normal drawdown, right? Not even like out of the ordinary. And we're still here at support. So, look, I'm not bearish on this asset, and if there's any weakness or bearishness in the market, then I'm going to use that as an opportunity and take the opposite side. But I have a different time horizon, right? These guys are saying, look, maybe for the next few months it's not going to be great. They might be right, and I think I'm going to be wrong long term. And if you're accumulating an asset, you have to buy it when it's weak. And any period of weakness in a bull market or in a bear market, that's where you have to go into it. So it just is what it is. But look, just be wary that this is going to come out, right? Joblessness, higher unemployment, right? GDP coming down a little bit, being soft, inflation being soft. All that's going to be pretty bearish short term. People can get worried about that. Like I've said, people get worried. The market gets worried. The market tries to force the hand of the Fed to stimulate again. Yeah, this is the game, right? So we can take a step back and say, let's buy the best assets. And if there is any weakness, let's just dollar cost average in there and be consistent. The flip side of all of this macro bearishness that we're seeing right now at range lows in prices is that we kind of need this. We kind of need the US economic data to come a little bit weaker. We do need that. And that's going to actually give the cover to other central banks to weaken their policy and stimulate a little bit because they need to, right? China, Europe, other nations, they kind of need this. But the US's data is too strong. I'm not saying the underlying economy, I'm saying the financial data. GDP, inflation, stimulus, right? We were looking at all the central bank and government data here, right? It's not the real economy. But if we get some weakness in the States, that's going to give cover for the Fed to be a bit more dovish. Bond markets maybe rise prices, drop yields, good for risk assets, medium term. That's what we need. And so maybe this is actually what's necessary to have a better tail end of this bull market. It is necessary. We need the US data to weaken because other central banks can't do much when the data in the US is so strong. Weaker US economic surprises signal slower growth relative to consensus. This typically dampens demand for the dollar and pushes yields lower as markets price in weaker conditions and the possibility of a more dovish Fed. That is good news. Economic surprises index coming lower. You can see the DXY, the dollar index, typically tends to follow this. So this is actually a decent scenario playing out where you do need this weakness to come out first. And then later on down the line, you can get some deregulation, credit creation, some more dovish central banks. It's actually pretty good news. So look, it's not all bearish news, but I think the fundamental is if the Bitcoin price is weak, I want to be in and buying because it's the best asset, it has the most growth, and you get the returns when you're consistent buying down. But look, but maybe bearish short term, but it's kind of necessary and it actually sets us up for the rest of the bull market. So look, that's where I am. The reality is that we don't have a near-term bullish catalyst to focus on, and markets always pull back from that. You had the ETFs, you had the Trump winning the election, and he was very pro-crypto. Nothing like that's happening anymore, right? It's a lot more nitty-gritty. It's a lot more kind of slow and sluggish and grinding, and that's just how the market is sometimes. You have to play it, but where else are you going to accumulate, right? You have to accumulate during weakness, and you have to accumulate the best assets. Bitcoin's the most desirable asset. It's as simple as that. So if you do trade crypto, trade directly from your crypto wallet. You don't have to worry about anything on Apex. Amazing decks, you can trade directly from your crypto wallet on here. If you want a deposit bonus on Bybit as well, I'm still using these guys. No issues with them, business as usual for Bybit, or some of the other exchanges I use. You can see down in the description for all of the deposit bonuses and fee discounts there. I'm James, this is ManZG. Cheers for watching, and I'll see you in the next one.